Hello and welcome to Business Incorporated on Channels Television. I'm Ini John Mekwa. Coming up on the program today, Burkina Faso, Democratic Republic of Congo and Morocco become members of AFC. And East Africa's largest economies plan to borrow at least $16 billion to fund an economic revival. Ghana inflation hits record low. Before we bring the details of those stories, here are major business stories. First, market numbers on the African continent. It was mixed sentiment at major markets that we track on the continent. South Africa's JSE index and Egypt's EJX 30 were down 0.13% and 0.56% respectively, while the Nigeria's NGX was up marginally 0.02% at intraday. Kenya closed 0.13% positive on Wednesday. And in the Middle East, it was mostly green. The Dubai financial market was up 0.39%. Saudi Arabia was up 0.29%. And Qatari index was also up 0.29%. Now, the Abu Dhabi was the one on the flip side, down 0.04%. And markets open rather cautiously as investors await the U.S. inflation report and ECB's decision. And while we await their decision, we have Chelsea joining us now from Frankfurt to give us a peek into what that is. Good afternoon, Chelsea, and thank you for joining us.
Thank you for having me.
So it's been a busy trading session, U.S. inflation, and latest European Central Bank policy decision that has just been released. How are markets reacting to this news?
Well, I'll start with the U.S. inflation data, which was just released about 2 minutes ago. The inflation data was higher than markets had been expecting. U.S. inflation rose by 5% in May compared to the prior year. That was higher than the 4.7% analysts had been expecting. This is going to be a big shock to the market. Inflation has obviously been rising around the world. Part of that is because energy prices have gone up a lot. So gasoline, the energy for heating your home, all of those are rising, as well as economies reopen. We're seeing a lot of demand for products again. So things like airline tickets, hotel prices, costs for eating out, all of that is going up. For now, investors are taking this a little bit in stride. The DAX behind me has fallen a bit since that number was released, but not a significant plunge right now. The other thing that investors are really watching today is the European Central Bank, which also just about 45 minutes ago released its decision. They also are acknowledging the rise in inflation. Inflation is picking up here as well, but they said they aren't going to change their monetary policy anytime soon. So interest rates stay the same. They are going to continue buying bonds at a significant pace, but for now, no major changes from the ECB.
And then the ECB President, Christine Lagarde, will start her press conference soon to discuss their decision. What do we expect from that?
Well, I expect Christine Lagarde to get a lot of questions today about inflation. This has really been the major theme across the world, how central bankers are really thinking about the rise in inflation that we've seen. For now, what we've heard from both central bankers here in the U.S., or here in Europe, in the U.S., as well as in China and other places, is that they aren't too concerned at this point about inflation. It is going a lot higher. These are the biggest increases we've seen in years, but they think that these will be temporary. And so they're not really ready to pull back the stimulus that's been supporting the economy. They want to wait and see that the economy actually does recover strongly from the coronavirus pandemic, that people get their jobs back, that businesses don't go bankrupt before they start pulling back the stimulus. So I would expect Christine Lagarde to get a lot of questions about when they really expect the economy to be on solid footing.
So shares in German baby goods retailer Windlin have surged this week, similar to the moves in meme stocks like GameStop. Tell us more about this.
Well, the meme stock trend does seem to be hitting the German markets as well. There have been a couple of these very small, somewhat unknown shares that have really been on a wild ride for the past couple of weeks. The first one you mentioned is Windeln. They sell baby goods, and their stock has risen about 250% in the past 5 days. Today, though, it's actually down about 35%. Another one we've seen really going wild is a women's retailer called Adler Moda, and their stock is up about 600% in the last month. The thing is that analysts don't really see any reason for these moves. They seem to be getting hyped up a lot on social media, on YouTube videos, on Reddit, but it does seem to look a bit like the social media-driven frenzies that we've seen in the U.S. Over the past couple of months.
All right. Thank you so much, Chelsea, for bringing us up to date from Europe. Enjoy the rest of your day. So we move over now to London, where we have Simon joining us from our London studio to bring us up to date with information from the UK. Hello, Simon. Good afternoon.
Good afternoon.
Yeah. So the U.S. inflation data is out. Has the market in the UK had any chance to react to this? What's the market looking like at this time?
Yeah, the US inflation has taken off in recent months. The number for April was 4.2% annual increase in prices. We haven't seen that kind of rise since 2008. Well, economists had expected here the highly anticipated US data, which was out just a couple of minutes ago, and the headline year-on-year inflation rate, they were expecting about 4.7%. It is 5% in May, up from April, and the markets will probably be all over the place after that, because that is quite unexpected, higher than expected. The core inflation reading, which excludes volatile food and energy prices, that was anticipated to have reached 3.4%. It's actually gone to 3.8%. So those hot US inflation figures, they could well unsettle the markets here. But at intraday, the readings, which obviously came out before those US inflation figures, markets were steady. The FTSE All-Share, which is the aggregation of the FTSE 100, FTSE 250 and 300 smaller companies on the London Stock Exchange, that was up slightly, with the FTSE 100 rising close to 0.3%. The FTSE 250 down there by about the same amount. Currency markets also lacking direction. The pound slumped yesterday after the EU and UK talks over the Northern Ireland Protocol failed to break the deadlock. Well, today at intraday, it was down slightly on the dollar, up by about the same amount on the euro, and down also on the Japanese yen.
And the workforce of all UK businesses on the coronavirus job retention scheme fell 7% in the last 2 weeks of May. How is this new twist hampering data, especially, you know, with the, I don't know if that's still upcoming, the June the 21st Freedom Day?
Yeah, I'd say good news this really for a few reasons. As you say, the Office for National Statistics reported that the proportion of all the workforce in the UK business on coronavirus job retention scheme fell to 7%. That's the lowest level reported since the series began back in June 2020. That was after the first lockdown was relaxed. The number of UK online job adverts rose by 2% last week to 29% above its average in February 2020. That's another sign that demand is picking up. Hospitality firms are looking for more workers, while transport, logistics and warehouse, travel and tourism and wholesale and retail also saw increases. It means really that as the UK opens up, companies are hiring again, and that should help. All eyes, as you say, on June the 21st. Any delay in opening up and easing restrictions then could hit the markets badly, with hospitality, tourism sectors already struggling badly with so few people travelling or staying in hotels. So we await for the 21st and any announcement from the Prime Minister then.
All right, and the government is being accused of dragging its feet on China forced labor. What has been the government's reaction to this?
Yeah, China has been accused across the world, really, of committing genocide and crimes against humanity through its repression of the Uyghur population in Xinjiang. Allegations, of course, it denies. Well, in March, the business department here in the UK vowed to sanction firms here that could not prove that they had no ties with Xinjiang or in the production line. But while the government agreed to amend and strengthen the Modern Slavery Act in 2015, the business department's select committee said its response had not gone far enough. It also said that ministers had rejected most of the recommendations it had made to improve oversight in an earlier report. Well, a BEIS spokesman said the UK was the first country in the world to require businesses to report on how they are tackling modern slavery and forced labour in their operations and in their supply chains. They also say that in January a package of measures were announced to ensure no UK organisations were complicit in serious human rights violations perpetrated against the Uyghurs and other minorities. The committee did also welcome the government's decision to impose targeted sanctions against perpetrators of human rights abuses in Xinjiang. So I think the government is saying that more packages and more measures are going to come into effect, but the regulator is saying, well, you know, actions speak louder than words. So I guess, again, we'll have to be looking closely at what the government does actually do as opposed to what they say they're going to do.
Yeah, well, we'll wait and see. Thank you so much, Simon, and enjoy the rest of your day. So moving over now, Asia Pacific mostly rose as investors look ahead to an upcoming release of the data. The Shenzhen components in mainland China jumped 1.19% to close at 14,893.59, while the Shanghai Composite gained 0.54% to finish the trading day at 3,610.86. Hong Kong's Hang Seng Index slipped about 0.1% as of the final hour of trading. In Japan, the Nikkei 225 closed 0.34% higher at 28,958.56, while the Topix Index finished the trading day a little change at 1,956.73. South Korea's Kospi advanced 0.26% to close at 3,224.64. Shares in Australia notched higher, with the S&P ASX 200 up 0.44% to close at 7,302.50. MSCI's broadest index of Asia-Pacific shares outside Japan climbed 0.38%. And in the U.S., futures contracts tied to major U.S. stock indexes rose during the overnight session of Wednesday evening as investors eyed a key inflation report. Dow futures advanced 42 points, while those tied to the S&P 500 added 0.07%. Nasdaq 100 contracts were mostly flat. U.S. markets continued to trade within a tight range yesterday, with all three major indexes ending the day within 0.5% of Tuesday's closing levels. The Dow, S&P 500 and Nasdaq Composite all fell during regular trading, and in the session further away from their respective all-time highs. The S&P 500 remains closest to its benchmark and is just 0.44% away from a new all-time high. The Dow and Nasdaq are roughly 2% away from records. And oil prices slid today as inventory data in the United States, the world's top oil consumer, showed a surge in gasoline stocks that indicates weaker than expected fuel demand at the start of summer. Brent crude oil futures were down 34 cents, which is 0.5%, at $71.88 a barrel, while U.S. oil futures declined 36 cents at $69.60 a barrel. U.S. crude oil stockpiles that include strategic petroleum reserve fell for the 11th straight week as refiners ramped up output, while fuel inventories grew sharply due to weak consumer demand, the Energy Information Administration reported. Crude inventories that excluded SPR fell $5.2 million in the week of June 4th to 474 million barrels, the third consecutive weekly drop. But fuel stocks were up sharply, with products supplied falling to 17.7 million barrels per day, against 19.1 million barrels this week, the week before. I'm moving over to the metals market now. Gold prices were subdued today, weighed down by a firmer dollar as investors sat on the sidelines waiting for clearer signals on inflation levels and economic growth ahead of U.S. data and the European Central Bank meeting. Spot gold was down 0.2% at 1,885.51 per ounce, while U.S. gold futures fell 0.4% to 1,888.80 per ounce. The dollar index edged up slightly to trade near $90 against its rivals, making gold less appealing for other currency holders. SPDR Gold Trust, the world's largest gold-backed exchange-traded fund, said its holdings rose 0.6% to 1,043.16 tons on Wednesday from 1,037.33 tons on Tuesday. Silver dipped 0.1% to $27.73 per ounce. Palladium was steady at 2,777.69, while platinum edged 0.2% lower at 1,147.56. Well, after the break, more updates now. It will be coming from the commodities market space. To stay with us. Welcome back. You're still watching Business Incorporated on Channels Television. Well, the controversy about open grazing and the confinement of cattle herdsmen to restricted areas is raging. Notwithstanding, the Amalgamated Union of Foodstuff and Cattle Dealers of Nigeria has threatened to cut off the supply of cattle to the southern part of the country. This is following a similar threat that we discussed on Tuesday by Opman. Lagos is estimated to consume 6,000 heads of cattle daily and boasts of 16 abattoirs. Juliet Adenuga, Head Treasury and Financial Institutions at Financial Derivatives Company, joins us now to talk about the possible implication of this line of action. Good afternoon once again. Thank you for joining us, Juliet.
Good afternoon, Ine. Thank you for having me.
You're welcome. So what are the immediate and wider implications of the proposed boycott of the southern markets on already the price of beef is selling at 2,200 per kilo, is now up 29.4%. It used to be 1,700 this time last year. What are some of those implications at this time?
Well, the union actually gave the federal government just 3 weeks to tidy up the challenges they face in transporting cattle to the southern part of the country. They are usually exploited, causing the landing cost of cattle and also their profit to be eroded. So they gave the government an ultimatum. So do something about that or they'll cut off supply. This will have, if they make do their promise or their threats, is that there's going to be a shortage in the supply of meat. Even in anticipation already, meat sellers and cattle owners that are already on ground might easily want to start hoarding, beef and begin to increase the price. But I know that in the short run, once this happens and there is a shortage in supply, the price of beef is going to go up from the 2,200 naira per kilo that is going at. And if it continues for a while, people might tend to begin to look for other substitutes. But we will have to understand that this picture is not something that is supposed to be permanent. It's supposed to be for a while, and it's supposed to ease out. And if it eases out after a while, there will be an influx back into the market, bringing down the price of beef once again.
Okay, but let's try to understand consumer behavior and the way they will react to this. We see the price of substitutes have already gone up. Fish, chicken, turkey, they've already soared to an average of 41%. On the other hand, you also have some consumers who are taking to dieting or being more health conscious. So when we look at these two scenarios, what should we expect from this threat?
Nigerians are becoming more aware of the health implications of eating a lot of red meat because of the cholesterol, cholesterol level in it, because of the impact it has on other things like diabetes, how it, hastens or strengthens diabetic conditions or other hypertensive, issues. So most Nigerians, you notice, a lot of Nigerians, are tending to being vegetarians. Some people are combating their health issues with, exercising more. Some people are also taking medication, while some people, just the way they prepare is what makes them take care of that cholesterol intake. I think that presently with the issue on ground about meat and the price increase, the substitute is supposed to be the alternative for the consumer. Because normally when the price of a particular good increases to a point of not being affordable, or even before then, the best thing a consumer does, or the best option to a consumer, is to look for an alternative. But now the alternatives are even more expensive to reach or to get. I think that Nigerians are left with no option than to either continue consuming meat and managing the health implication by either way, or cutting off meat entirely. But I don't think the problem of Nigerians is in terms of portion control of animal protein. I think their main challenge is the affordability. So with not being able to afford it is even the first concern that should be in the picture before you talk of the price of substitutes. Substitutes are more expensive. And to look at is, can they even afford it in the first place? Is it too expensive for them? But I don't see any threat to coming on the demand for beef, because people can have other ways of handling the challenges associated with it that is health, health related. They can grill to remove the cholesterol. They can also exercise to balance their pH level. They can also take medication. So I think that with the price of something being so up there, people might still remain with meat and handle the challenges, any way best they can think of doing it.
And in the midst of these squabbles, the one from the Onion Marketers Association and now from the meat, what's the country losing? And how do you see a permanent solution to all of this?
Okay, on the issue of what's happening with the onion and then now the cattle issue, the first thing is that we are losing income. Agriculture contributes about 22% to the GDP of Nigeria. And with what's happening now, northern onion farmers have already started complaining about the loss they've started incurring since Monday. Now, onion, we know, is about 86% water. It's very perishable. Most of the onion not moved to the other regions of the country for consumption have started decaying. And we know that we don't have very good storage facilities in the country. So the first challenge is that there's going to be loss of income to the federal government's coffers, even to the farmers. It can run some people out of business. Some farmers might, their income might be totally eroded by what is happening now. And if that happens, that means that some farmers will have to close down shop. And the people that are employing will not be able to have any job to do. This can lead to increase in crime as people are looking for a way of survival. It affects the investors' confidence. In short, it erodes, because if we see what's happening, people won't be encouraged to go into farming. You are not even sure that when you finish farming, you will still be able to sell and make your profit out of it. There is no farmer that goes into the business just to lose at the end of the day.
All right.
The implication is.
Thank you so much, Juliet. Thank you so much, Juliet, for sharing your thoughts with us on this threat to our food supply. We're moving on now. In a milestone for its Pan-African mission, Africa Finance Corporation, one of the region's biggest investors in infrastructure development, has announced that it has exceeded 30 members representing more than half of the continent. Membership by Burkina Faso, Democratic Republic of Congo and Morocco, all in the first quarter of 2021, brings the total number of AFC member states to 31, an increase from 26 members a year ago. And moving on now to East Africa. East Africa's largest economies plan to borrow at least $16 billion to fund an economic revival while striving to ease their debt burdens after the coronavirus pandemic battered government's revenue. Finance ministers in Kenya, Uganda and Tanzania will present their 2021-2022 spending plans today, providing details on funding key projects, including building railways and ports in the wake of heavy indebtedness. And in Ghana, inflation rates dropped to a record low in May, falling below the middle of the central bank's target range. Consumers' inflation slowed to 7.5% from 8.5% in April, the lowest rate since at least the start of 2013. And that's it on the program. Thank you so much for watching. I'm Ini John Mekwa.